In the fast-paced world of Forex trading, the question on every trader's mind is, how do you avoid losing money? It's one of the biggest challenges and the ultimate goal for anyone in this field. But what if the answer wasn't just about having the best strategy or using the most advanced tools? What if, in fact, there were some simple but effective methods that even experienced traders use to keep their profits safe? Today, we asked 10 Forex traders from all walks of life to share their secrets. And the results might surprise you. Meet John, a professional trader with years of experience under his belt. His first tip is all about setting limits. I always make sure to have strict stop-loss levels in place, he says. It's easy to get caught up in the excitement, but setting a limit helps me keep my emotions in check and avoid making rash decisions. For John, discipline is key, and knowing when to step away from a trade has saved him more times than he can count. Then there's Sarah, who's been trading part-time while holding down a full-time job. Her approach is a little different. I always do my research, she explains. You can't just trust your gut, especially in Forex. I study the markets, watch the news, and analyze trends before making any trades. Sarah emphasizes the importance of being informed and not rushing into trades without understanding the risks. For some traders, it's not just about the technical side of things. Mark, a seasoned trader, says, I focus on keeping my mental health in check. Trading can be stressful, and if your mindset isn't right, it can lead to bad decisions. I make sure to take breaks and avoid overtrading. Mark's advice is a reminder that Forex trading is as much a mental game as it is a technical one. Lisa, who works as a professional Forex trader for Innohedge Limited, believes that patience is a crucial element in avoiding losses. I never rush into a trade, she says. Patience and timing are everything. Sometimes, the best move is to wait for the right opportunity rather than forcing a trade when the conditions aren't ideal. For Lisa, it's all about waiting for the perfect moment rather than trying to capitalize on every small movement in the market. David, who has a more aggressive trading style, approaches risk differently. I always set a risk-to-reward ratio, he explains. I don't risk more than I'm willing to lose on any single trade. It helps me stay grounded and not get carried away by the highs or lows of the market. David's strategy involves managing his risk up front, so that he never ends up in a position where the loss is more than he can handle. For Anne, it's about managing expectations. I've learned over time that not every trade is going to be a winner, she says. I focus on keeping my losses small and my wins bigger. Having realistic expectations helps me avoid emotional reactions when things don't go as planned. Meanwhile, Tom, a full-time Forex trader, uses technology to his advantage. Rely heavily on automation, he shares. I've set up algorithms and trading bots that execute trades based on my strategies, takes the emotion out of trading, and ensures I'm always sticking to my plan. Tom's use of technology helps him avoid the impulse to act on gut feelings or market noise, giving him more control over his trades. Maria, a newcomer to Forex, emphasizes the importance of learning from mistakes. I don't beat myself up if I lose a trade, she says. Instead, I look at what went wrong and learn from it. Every loss is a lesson, and it's helped me become a better trader. For Maria, trading is a journey, and each mistake is an opportunity to grow. Another trader, Kevin, talks about the value of a trading community, part of a group where we share strategies and ideas. Having people to bounce ideas off of and learn from each other has been invaluable, he says. Kevin believes that being part of a supportive community can help traders avoid common pitfalls and gain new insights that they wouldn't have thought of on their own. Finally, we have Rachel, who's all about balance, and make sure to stay diversified, she says. I don't put all my money into one trade. By spreading my risk across multiple assets, I reduce the chances of a big loss. Rachel's advice is a reminder that, in Forex trading, diversification can be just as important as having a good strategy. In the end, the common theme across all these traders is simple. It's not about finding the perfect strategy or chasing after every opportunity. It's about managing risk, staying disciplined, and most importantly, understanding that losses are a part of the game. By following the tips shared by these 10 traders, you can reduce your chances of losing money in the Forex market and hopefully start seeing more consistent profits. At Innohedge Limited, we believe in empowering our traders with the tools and knowledge they need to succeed in Forex trading. Whether you're just getting started or have been trading for years, The key is to keep learning, stay disciplined, and never stop improving.